Hello, I'm Ali, and in this video we'll talk about evidence gathering procedures. These procedures are carried out at various stages of the audit. For example, when assessing risk, gaining an understanding of the client, gaining an understanding of a client's system of internal controls, testing those controls, conducting detailed substantive testing and drawing the final conclusion. The first procedure is inspection. An auditor inspects records and documents for a variety of reasons. When testing controls, auditor inspects documents for evidence that, for example, balances that have been reconciled, calculations have been checked, inputs have been agreed to outputs, and management has authorized significant purchases. In case of substantive testing, records and documents are, just in case substantive testing and records are inspected to make sure, for example, that purchases were made by their client and that a transaction actually occurred. Tangible assets are inspected to provide evidence that they exist and appear to be in a good shape or not damaged or past their use by date. When a client conducts a stock take, the auditor will attend and perform test counts and even can trace these assets to the accounting records. The next procedure is observation. Auditor observes clients' staff undertaking various procedures when there is no other way of establishing that a process is being used by their client. For example, an auditor observes the opening of mail and the conduct of a stock take to determine whether the appropriate procedures are being followed. However, observation provides evidence of a process at the time the auditor observes it being carried out. The auditor needs to determine whether there is an evidence that the procedures observed have been applied consistently throughout the period under the audit. Inquiry. It is very commonly used when gaining an understanding of the client and to corroborate other evidence gathered throughout the audit. The results of inquiries of client personnel and third parties are documented by the auditor. Recalculation, and it involves rechecking of computations performed by the client to ensure mathematical accuracy of files and records, which is obviously important but does not address the assertion of existence, rights and obligations and completeness, etc. Computer-assisted audit techniques can be used to help recalculate huge quantities of data. In this technique, clients' data such as the inventory file, the receivable file, the general ledger itself is imported into the auditor's computer. Once the data is imported, then the auditor is in a position to do all sorts of recalculation tests, such as testing the inventory extensions or the aging of the receivables to compare against the client's records. Reperformance is often used to test the controls, means following a process used by a client or redoing a procedure performed by the client. When testing controls, client procedures are reperformed to check controls are effective. In case of substantive testing, client estimations are reperformed to verify amounts calculated by the client. For example, when testing the allowance for doubtful debts, an auditor will reperform the aging of debtors to arrive at an estimated provision amount. Analytical procedures are used to evaluate the relationships between financial and non-financial information. In the risk assessment phase of the audit, unusual fluctuations are identified, whereas in risk response phase of the audit, analytical procedures are used to evaluate the information included in the financial report. At the review stage of the audit, analytical procedures are used to assess whether the financial report reflects the auditor's understanding of their client. Then in the next video, we'll talk about internal controls. Thank you.